Hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and let's break down today's market price action. It's a Wednesday, January 22nd. Let's get into it. There's a lot to discuss. As always, we'll be taking a look at broader market analysis, take a look at what's happening in the markets, take a look at major news events, take a look at currency baskets, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Jumping into the market analysis, let's just jump right into the headline, the numbers. Well, you can see that the markets are extending the gains from yesterday. So we're seeing a markets now back to the resistance level that we look at the chart. Now, where do we go from here? We'll find out, but we are at a key resistance level. So market sentiment in the short term is bullish. And then I think we'll probably stall right at the resistance level. Now we take a look at the dollar. Dollar remains that volatile currency. As you know, as the outlook I had for going into this week, I don't think that the dollar was a great buy or is a great sell. And that's exactly how the dollar has been. You know, there's been definitely a lot of moves back and forth. But again, as you're looking for a trend, it's just not really giving us a trend as of yet. Because, you know, we still have that tariff that's still looming. I know that the day got pushed till February 1st. We'll see what happens. But I think till then, we can expect a little bit of more intraday volatility. Now, as we take a look at the relative strength and weakness today and look at the numbers, you can see that as the market is rallying, we are seeing the risk on currency, like the Australian dollar, is doing well, up 0.37%. Kiwi, not so much, is just still lagging. So we have a nice divergence going between the Aussie and the Kiwi. Now, as we come down in the middle, you can see that Swiss franc euro doing better. Then we have the pound mostly flat. We have Canadian dollar slightly weak. And then we have dollar a bit stronger today. And then the biggest move really was today is the Japanese yen. So as you can see that it was not a great sort of a percentage move day. But we're definitely noticing a lot of intraday movement where, you know, we're seeing things down in the morning and then they recover, or when things are up higher and then they fall. So we're just getting that intraday volatility. That's really where the action is. Now, if you take a look at the other markets, you can see S&P up nicely. We have World Stock Index sort of following the same suit. We have gold that's still continue to do well. And we have the oil slightly down. You can see that crypto is sort of pulling back a little bit here. So I think same thing. Crypto is probably looking for another good news. But overall, crypto has been doing well. So just a bit of a short-term pause. And you can see that in the crypto world, like everything was kind of on par as far as the relative strength weakness go. So maybe just a broader pullback in the crypto markets. Now, if you take a look at the outlook here. So our outlook remains bullish. But again, this is where I want everyone to think about. You know, we were right at the doghouse over here when we're just going back and forth. And that's quite a bit of range. And within this range, we're getting some big candlesticks. You know, we got a big candlestick down here. We got some big candlesticks up here. We got some big sort of a rally pretty much going from here to there. So question is, do we break out from here or do we pause? Well, as we, this is a strong resistance level. Here's what's going to happen. I think we're probably going to pause over here. Either we pull back and that range remains in place, or we do a bit of a small shallow pullback and then sort of rally higher. So those are the expectations that we have here. But I think markets still have a bit of to go through to break out to sort of new all-time highs. But in the shorter term, market is positive. But like I said, I won't be surprised if markets sort of stall over here. Now, as far as the news event goes, there's still a lot to go through. Tomorrow, we have the Canada retail sales. We have the U.S. Employment claims. We have the President Trump that's speaking tomorrow. So, you know, this is where you got to add that to your calendar because whatever he says or any changes to the policy is going to affect the dollar and the markets. But the most important one that I'm watching for tomorrow night is the Bank of Japan. So they are expected to raise rates by 25 basis points. But what's going to be more highlight here is what they say in their monetary policy statement. Remember, they're the most dovish one out there. They were the last one to really raise rates as everybody's cutting rates. So I think this is a kind of interesting dynamic here where, we don't want to be discounting the yen here, but, just be aware that's coming up, and, yen can move aggressively either way. And then as we go into Friday, we got some PMI number out of the Eurozone and the US. But I think the next 24 hours look more interesting to me as far as the bigger Japan event goes. So let's just do our currency analysis here, and let's just take a look at velocity scores and then jump into those currency pairs accordingly. This is where the velocity score is. You can see that there's a whole lot in the mildly bullish or mildly bearish category. The Aussie is the one that's doing well, but I'll show you the charts, and I think those are the levels that we gotta just identify and watch, and then see where we go. Because even though things are looking a little bit better shorter term, it's the continuity is what we are kind of lacking here, where we are cautiously bullish or bearish because headlines tend to move the markets quite a bit, especially in the last 24 to 48 hours. If you've been watching the yen crosses, we saw some big moves. So I think that's something we got to continue to be wary of. So let's just jump into our possible trades ahead, and let's just take a look at those currency pairs.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let me just talk about the US dollar here first. Well, you can see that this is the daily chart. So daily chart definitely have gone into this consolidation phase. But you can see that in the 4-hour chart, this is not an easy short. This is why I said it's not a great sell, it's not a great buy, but you can take advantage of these short-term volatility. As you can see, big move down here. We got a big candle up here. We got a big down here, and then you can see rallying up here. So this is, again, it's not a great trend. This is a lot of volatility. So these are the times where if you are a shorter term trader or just focusing on the velocity on a day-to-day basis, it's a great time. But if you're looking for those trends to develop, this might not be the best time because the trends are not really developing. So you got to understand that market kind of suits to each strategy. Depending on what's going on in the market. Sometimes trending markets is easier to trade, and then sometimes you get this volatile markets that it's difficult to trade on a daily trend. But then it's easier to trade when you're just focusing on the velocity. So that's really where we are with the dollar. I mean, as you zoom out here, you can see that this thing is not an easy sell. It's not an easy buy. Just understand it's likely to go back and forth, especially with this. The threat that continues to be looming on the tariffs. Now let's just talk about the Japanese yen here, because this is an interesting one. You can see that we did sell off, got towards the support area, but at the same time, let's go to the daily chart. You can see that daily chart. This thing is not really going anywhere either. We got a good support here. We got a good resistance here. So I think I'm kind of in the middle here at 0. I mean, I think it could go really either way. Either it could just bounce off of here and break out or break down lower. So I think I was just going to wait and see which side does it break first. But at this point, I don't really love a short here. I know on a 4-hour chart, we can say that, this looks like it's trending lower. But again, looking at the trend, I want to be on the sideline here on the yen. So we have the Swiss franc, which is again painfully just drifting sideways. So again, same thing, looking for a trend. It's not really there. But there's been definitely short-term opportunities on the Swiss franc as well. Now, the euro is the one that, if you look at the 4-hour chart, that gives you a good sort of a trending velocity score. But then you can go to the daily chart, you can see that it's not a screaming buy. It's mildly bullish, I would say. It's slowly getting higher. We got a resistance right here. But again, remember, if there's any news regarding tariffs for the Eurozone, I think this could easily get knocked down as well. So in the shorter term, definitely there's a relative strength there. But again, this is where you just use your stops, and if it really breaks certain level, then you get out. And right now you can see on a 4-hour chart, I like the fact that it's nicely trading above this moving average, this 13-day exponential moving average. But now you should pay individual attention to these candlesticks here. Not the easiest one to trade. So just use the strategy accordingly. And then here we are with the British pound. This has also gone sideways as well. I know we really like the pound of the short, which was been a great trade. But I think in the shorter term, it's bouncing here. You can see that this is a great level of support. Now, we tested a few times. This looks more like a bear rally to me, but it's not really confirming to roll over yet. I think the big opportunity is going to be when it breaks this support here. I think that's where it's going to be all signals going green for the pound to break. But till then, again, I don't really love it to buy. I don't really love it as a sell. And then here we are with the Canadian dollar. And this thing, again, is another one that's sort of, on the target for the tariff. You can see that this is this resistance. We got a support here. A lot of volatility in this one as well. This is a 4-hour chart. You can see that this thing, is pulling back a little bit, but has some periods in there where, CAD did well, and then it just ended up giving up the gains. So I think CAD probably underperformed, especially going into, the next week. I think, February 1st was the deadline. As Trump said, for the tariff for the Canada and Mexico. So I think that keeps the pressure on the Canadian dollar here. So I think that I'll just tread the water carefully for the CAD into next week. Then we have the Aussie, which again doing well. As you can see, this thing is all it's right outside of that downward pressure here. We got the RSI moving up. So this has the potential to really break out higher, but I think for that we could need to see dollar being a little weaker. So I do like growth currencies. Again, you can see that they were going lower and lower. Now they're going sideways here. So I do like Aussie in the upside, especially if I see an opportunity where you can take advantage, of that market sentiment. And if the dollar's pulling back, I think Aussie likes to outperform. And then here we are, lastly, the Kiwi, which again was in a big downtrend, and here we are just sort of consolidating here. So just realize that there's a lot of things that are in a consolidation phase. So pick things that are actually performing a little bit better. Now, we like the Aussie. Let's take a look at the Aussie against the USD. You can see that this thing is also right up, we got this moving average. So this is the downtrend that we had for almost 3 months. It's not a screaming buy yet. You can see that the candlesticks here, we got a nice candle here, but look at the candlestick here. Look at the candlestick here. So, if you are trading this, just understand that you got to give a little bit more room for this. But again, we are not really out of the woods yet, like I said, as far as the tariff goes and other things. So that's just going to keep pressure on some of the things here. So I do like Aussie, even Aussie dollar, but again, not really looking to jump on it yet. Maybe buy the pullbacks. Maybe that's a better opportunity than buying the breakouts. Here we are with the Aussie yen. And again, depending on what happens with the Bank of Japan tomorrow, again, if you're looking for a weaker yen, I think Aussie yen looks better to me here. We got a nice little range here. This is support resistance. And right now it's right up against the resistance. So if it clears out this level, this can easily get towards the 101, 102. On the downside, you can get towards the 96. So you can see that it's, there's a decent range to be had over here. But like I said, this is a coin toss at this point. But for the Bank of Japan meeting, I think I want to be keeping the powder dry and sort of, scale accordingly. We can also perhaps take a look at, see what pound Aussie's doing. I know a lot of traders were looking at that, but you can see that this thing is looking nice there. So this is, again, more pound is going sideways, but Aussie is the one that's actually doing a little bit better here. So I really like this low base forming on the pound Aussie. Going on a 4-hour chart, you can see we are just at the bottom end of the range here. So ultimate break of this, I think I do like it, but at this point, don't really want to pull the trigger as of yet. And now here we are. Let's just take a look at any other crosses here. Again, Swiss franc going sideways. We can take a look at Aussie Swiss franc, but no, that's not going anywhere either. So really, if you take a look at it, there's definitely a lot of opportunities intraday. I mean, this is a dollar CAD chart. You can see how much it's moving, on a day-to-day basis. So, so this is what I think that's really where the opportunity is right now. The back and forth, that we're getting here. Let's just take a look at Aussie dollar. You'll see the same thing. If I go down even to an hourly chart, you'll notice that, getting a big drop, a rally, a drop, a rally. So again, these are the environments where maybe pullbacks are better opportunities than buying the breakouts. But I think this is how market likely to stay. So as always, use the right strategy for that market condition. And in conclusion, I think the market intraday volatility likely to stay high, which means that back and forth, that's really what we are dealing with in the markets. And again, I think it will smooth out over the next few days, especially after the February 1st, or we get some more clarity on these threats for these tariffs. So that's trade the markets in front of you. It is a risk on sentiment, but at the same time, keep a close eye on those trend scores. Now we are at the top end of that range in the markets. So if the market does pull back, then expect the risk sentiment to sort of go a little sour as well. And I think that's where markets can go back and forth. So that's the game plan here. Let me know if you have any questions. Happy trading. See you in the next one.